it's game over for shale. Okay. But what people, and I talked to a lot of people yesterday, a lot of oil investors, a lot of investors that don't even invest in oil. And I was curious as to what they thought about it. And I really appreciate the feedback. And so the biggest question is, okay, we know that shale is going out right now. Shale is on life support. It's like the longest end scene we've ever seen, where the guy is dying, he's bleeding out, he's giving his last words. And instead of it lasting for a minute, 5 minutes, it's lasting for months. Okay. But shale's out the door. And the thing that you need to understand, I heard some people comparing it to the airline industry. The airline industry is based on debt. They don't profit, okay? And when things fall apart, they go file bankruptcy and they're back to business, okay? But the difference is that shale, if they get rid of all their debtors, let's say they get rid of their debt. Now all they have is production, right? Well, obviously, I don't care if it costs $1 million or $1 billion to drill one well. 10 barrels a day is 10 barrels a day, and if that debt goes away, that 10 barrels is profit, and all you're out is the electricity cost it takes to pump the oil and the pumper gauge or what have you. So yes, it's profitable if you go file bankruptcy, you get rid of all the debts. Yes, it is profitable, but there's the part you're missing. You're missing the part that shale oil and gas, the decline curve is massive. So what happens when that 100 barrels a day goes down to 10? Well, now it's not economically feasible anymore to even pump at those rates, because the electricity to pump a well and to maintain the well and the gatherers have to make their money. They got to pick up the oil and take it to the refinery. At some point, it's not economically feasible to even pump the well anymore. And the reason why these wells produce oil to begin with is because of fracking. Fracking is the most expensive part of shale. That's why conventional oil is profitable at 30 and unconventional shale wells. Unconventional means you got to use an unconventional approach, which is fracking. Fracking is very expensive. So in order to get a well that goes from 1,000 barrels a day down to 100 very quickly, because it's shale, because you're having to artificially induce the oil to get it out of the ground using fracking, but that artificial stimulation, it doesn't last forever. What lasts forever is a conventional well. It produces for the next 30 years until it's depleted. But a unconventional shale well, the decline curve is very quick, okay? And so in order to get it to start producing what she originally started producing is to refract the well. Well, now the shale company who wrote off all their debt is not getting any more money from the banks, nor is investors putting their faith in shale anymore. And so what happens is that they don't have the money to go in and refract these wells. That's number one. Number two, they don't have any money to drill new shale wells, okay? And so you cannot maintain that massive output. Back in 2009, 10, 11, before shale, we were producing 6 million barrels a day from conventional oil plays. Now, 2012, easy to get to money, and all of a sudden, we're the kingpin in the oil and gas industry, outproducing Saudi Arabia and Russia as the king. They were kingpins for years. Now we overtook them because of shale alone. Well, shale's going out the door, all right? And so we are the shale industry is barely surviving this thing, okay? And here's what you need to understand. Oil prices are currently 32, 36 right now. Over the last 5 years, we've averaged about $50-something a barrel. And the 5 years were the dark ages for shale oil. And their goal was, we're spending money today with hopes that tomorrow oil prices will put us back in a profitable position. Right now, the average shale well, their break-even point is $60 per barrel. So over the last 5 years, they've only been breaking even. And there's a lot of companies that have done research to show that shale companies spent more money than what they produced out of the ground. I mean, if you spend $80 to get a barrel of oil out of the ground, it's only worth $60. You just lost $20 per barrel. Well, that's what's happening. Okay. Well, that was at 60. That was when oil prices were twice as much. Now, what's happening now? Okay. So they could file Chapter 11. Donald Trump could come and save the day and give them subsidies and bail them out and what have you. But you could bail out a Fannie Mae. You could bail out an American Airlines. But at the end of the day, Shale Oil, you could bail them out where they could stay afloat. But shale is going away. From a geological perspective, throw out the financial side, throw out the stock market, throw out your brainiac financial guys. Let's talk about geology. Geologically speaking, shale oil depletion is much faster than anticipated. The decline curve is massive. So all of these shale wells are going away regardless if oil prices are $200 a barrel or 2 cents a barrel. Shale oil is going away. But $30-something a barrel is only speeding up the inevitable. I want to look at an article here. Fracked shale oil wells drying up faster than predicted. Okay, this is an article from January 2019. Okay, and I wanted to read this article here. It's Eagleford Wells Pioneers filing said were massive finds, with each well able to deliver an average of roughly 1.3 million barrels of oil and other fossil fuels over their lifetimes. 3 years later, the Wall Street Journal checked the numbers, investigating how these massive wells are turning out for Pioneer. Turns out, not so well. And Pioneer is not alone. Those 1.3 million barrel wells, the journal reported, now appear to be on pace to produce about 482,000 barrels of oil. A piece a little over a third of what Pioneer told investors they could deliver. Guys, the oil and gas industry had to lie about their estimation for their shale wells. Why? Because the banks were writing checks based upon their estimated barrels of oil underneath the ground, what they can do. Okay. But the cat's out of the bag. I mean, I'm seeing these articles over and over again. I'm seeing these articles about how shale was a big, fat, juicy lie. And here's the icing on the cake. The decline curve for shale oil is even greater today than it was yesterday, and the decline curve is growing every day because you have to pump a tremendous amount of oil into a tremendous amount of frac fluid into the structure in order to pump oil out of the ground to break up that formation. Well, each time you do that, you're having to pump more water than oil. And so each well that they drilled, it becomes less and less economically feasible. Okay. And so what does life look like after shale oil? I wanted to look at a few headlines of the shale oil. Oil in the age of coronavirus, the U.S. shale busts like no other. U.S. shale output seen tumbling to 2018 low, led by Permian. Will American shale rise again? I'm seeing news article after news article, and it's about time. It's about time these news articles actually see shale for what it is, okay? And I truly believe that some of these shale engineers were telling the CFOs, the CEOs, what they wanted to hear, and maybe they're afraid of losing their job. And the CFOs and the CEOs, as they're being interviewed on Fox News and CNN, I mean, these news anchors, they don't know anything about oil. You as an investor, you don't know enough about shale. I mean, do you have a degree in geology? Do you have any experience in engineering? And so they pulled the wool over eyes. Okay, obviously I didn't, when I was listening to these shale guys, especially in 2012, and I was in it, and the news was inundated by these massive shale discoveries and billions of barrels of oil. And all the time I was rolling my eyes like, oh my God, these guys are hook, line, and sinker. They're idiots. And I just couldn't believe what I'm seeing. So it's nice to see that the news is finally sees the truth. But the investors are a little confused. The investors are like, what? what do we expect? I mean, what's going to happen now? Is Shell going to be bailed out? And what does that look like? Well, the only thing they know to compare it to is the airline industry or the real estate industry. But here's the thing. Even if they bail out Shell, the decline curve is massive, okay? And the oil companies are trying to figure out, how do we make this go away? And how do we find new discoveries, okay? And you got to understand something. Why in the world would oil companies put themselves in a losing proposition, okay? Well, because they had no other choice. Where else are they going to develop? Where else are they going to spend $1 billion? I mean, the shale oil and gas is a massive resource play. Every well they drill, it hits and finds oil. They could pump out massive amounts of oil, but for a short period of time. And that window becomes smaller and smaller and smaller with each shale well they drill. And so it's only getting worse for them. And so, yeah, they could pump a well. And sure, they could file bankruptcy and get rid of all their debt and just pump the shale wells they've already developed. But that shale well that's producing 1,000 barrels a day today, a month from now it's doing 800. A month after that it's doing 600. A month after that it's doing 400, all the way down to 100. And at some point, that shale well is not economically feasible to even pump anymore. And then what do? They shut off the well. Now, in the past, it wasn't a big deal because they were getting billions and billions of dollars from investors, from the stock market, billions and billions from the bankers, from the banks. Well, all that money has dried up. So now what? What do? Well, they got to go back to 2008. They got to go back to conventional. They got to go back to these high-risk offshore wells. They got to go back to drilling conventional. Now, here's the thing. Conventional oil, there's not enough room for the big Chevrons, the big Texacos, the big Shale Oils, the big companies. There's not enough room to go into Texas and drill conventional wells. That's the problem. So where are they going to go? What's going to happen? What's life after Shell? Well, see, we're back in the same position where there's not enough oil. And so everybody is saying, well, we don't need oil anymore. We have renewable. Well, if we got rid of oil today, we just shut off every single oil well. Russia, Saudi Arabia, OPEC, every Texas oil company, every Oklahoma oil company, every company in America, every oil company just shut off the spigots, shut off the oil. Every single oil tank went empty. Then what would you have? Well, you would have millions of gas-powered vehicles stranded. The grid, you'd see these massive brownouts to eventually no electricity at all. Why? Because everybody is using electricity. Our grids cannot handle the load that she has right now. We'd have to do a massive overhaul on our grid. Everybody would be clamoring to buy a Tesla. You would be 12 months out from receiving your Tesla electric car, and once you get it, you wouldn't even be able to charge it because there's not enough charging stations. And not only that, the charging station would work at 10% of what it was created to do because of the brownouts are so horrendous. I mean, I'm not an electrical engineer. I don't understand the city's grid. I don't understand the nation's grid like an electrical engineer would understand it. But I'm telling you right now, it would be mass chaos. These Democrats think that oil just needs to go away. They say that to rally their base because their base is these tree-hugging people that truly believe that oil is evil and renewables is the future. Well, renewable is not economically feasible. And so the sophisticated investors that are funding renewable energy, they're not making a profit right now because oil is so cheap. And so you have this problem. When oil prices go up, shale production goes up, causing oil prices to go down. renewable energy investments go down. And so you have this seesaw effect. And so I believe that we're going to see a major increase in oil prices, and then they're going to drop quickly again, because when that oil price goes up, shale increases. And so we're going to be doing this seesaw effect for maybe the next 6 months. But eventually, shale oil is going to go away. And we might be foreign oil dependent again for a season if we don't replace oil. Okay. So bottom line, we're going to see a major increase in oil prices, because with oil production destruction in full effect, with the decimation of oil investments across the world, because everybody is anti-oil right now because of the Democrats. Good job, guys. And there's only a small niche group of oil investors right now that actually know the truth, and they're actually investing right now. But the problem is that most people, they get their information from the news, and most of these financial brokers, the oil and gas industry is a small enough industry to where they don't fully understand. And they see through the lens of shale, because that's the stock market. And so most people get their wisdom from stockbrokers. They don't look for an oil man like me that actually goes out to fields and looks at oil wells and sees oil coming on the ground. They look to CFOs of major oil companies, and the major oil companies are the ones that made this mess. They're the ones developing shale, and they get their wisdom from these guys. They're not calling a guy like me. If they would have called me back in 2012, they wouldn't have thrown their money down the toilet. But they would never talk to a guy like me. Why? Because I'm a small oil company. That's it. So everybody's getting their wisdom from these guys, though, and they're getting their wisdom from shale CFOs, CEOs, and shale is a big, fat, juicy lie, and now nobody knows what to do, okay? And so right now, as oil prices are low at $32 a barrel, we're still profitable. I mean, $100, 100 barrels a day at $30 oil, that's grossing $900,000 a year on a well that only costs $600,000. That's a conventional oil deal. Problem is, if you gave me $1 billion, I'd be like, look, there's not enough room. But if you give me 1.8 million, hey, we got room. We got room to grow. We got room to develop. We got plenty of room to go, and let's have some fun. But if I was a CFO of a massive oil company like Chevron, I'd be sitting there scratching my head like, wow, we grew to this point. So should we shrink down to 10% of what we're doing right now and go after conventional, or do we find another play like shale that has caused us to grow massively? Well, where is it? Well, that's the problem. Where is this? They can't replace it. So, all right, guys, I'm Sean Pruitt, president of Kingdom Exploration. If you like these videos, please subscribe to my channel. I'm reading a lot of news right now in the oil and gas industry, but it's very confusing right now. It's very clear in my mind as to what's going on, but I think a lot of the news people, they don't know what to talk about. So what are they talking about? They're talking about the demise of shale oil and gas. But Russia, Saudi Arabia, they're playing the long game. They're waiting it out, waiting for shale to collapse. Okay. Now, the question is, what is Donald Trump going to do? Is he going to save shale? Well, he's a smarter businessman than I am. And if I was in his shoes, I would let shale fall apart and start investing in newer technology for oil and gas. I'd start investing in new discoveries and just let shale die. All right, guys, we'll talk soon. Thanks.